overnight, traders. Not too much has changed overnight. It's actually a very, very quiet night in terms of the market. We are getting a little bit more movement today in Asia and start of the European session. One of the things that's of note to me is the pound starting to recover a little. Seems to have found support at 128.60 a couple of times. Now the recovery here, I don't know how far we can get. If we get closer to 130, that would be much more interesting in the way it's developing. Definitely doesn't hurt to have dollar yen on the front foot though, because dollar yen on the front foot opens up the door for the pound yen to be punchy, and the pound yen, when it gets punchy, is really a big support for the euro. The other part of the pound equation is the for the pound, and the other part of the pound equation is euro pound, and if it stalls at the key level and rolls over again, then that'll be another level, another source of support, which is euro pound selling. So the pound's got a little bit of backing here in terms of making another run higher. Still got to get past a little bit of resistance in terms of how the market's been selling rallies, and so we'll see if we can get past this first little trend line support around about downward trend line resistance, around about 129.30. In terms of why dollar yen's having a good day, I mean, it was consolidating and the yields are high and the stock sentiment's still strong, so it was always inevitable that it was going to be testing this 1440, sort of the highs from March, April. Let's have a look here, and it's big levels here. Opens up the door for 115. Above that gets to the Trump levels, which is 118. So this sort of recovery here is being built upon the US yields, especially the 10-year, which is grinding relentlessly higher. Busted up past that 2.3 level on the US yields, has kicked higher to 2.38. At the moment it is at so this is the main driver. It's not really US dollar strength or anything. It's all about the yield movement, and yeah, 2.39, so on the way to testing 2.4. If we can get above 2.4, 2.58 I think was the high from back in the day. Let's have a look, go back further, weekly, up here. 2.64 it got to at one point. 2.62, okay, so 2.6, if it gets to 2.6, then you can see the dollar yen well on its way towards 118. A lot of bond traders talking about this move and this potential for the support's been found, and that next move is high is the next resistance there. Without some sort of sea change almost in the Fed, then it definitely looks like the bond sellers, which drives yields up, are in control, and that's a global phenomenon. You're seeing yields across the world increase, and the one place where it's not is obviously Japan, which are controlling both their short-term yields and their longer-term yields. That's their mandate. That's what Bank of Japan's been doing lately. So they're targeting the 10-year as well as the cash rate. So very hard to be selling dollar yen, very hard to be selling pound yen, very hard to be selling euro yen. Euro yen had a little bit of a wobble, nothing crazy though, and it's back above 130 and sitting comfortably above it. The euro itself is down below that 114 level, but nothing crazy. Can it get lower? Yeah, it can. Can it turn into a bit more of a correction? Of course, failing at the previous high opens up the door for the market to test lower. That 113 level, if it breaks, then we've got ourselves a little bit more of a downside risk. If it just meanders around here, then which I suspect it's going to, then tomorrow it's really all about Yellen, and then Friday's CPI numbers. So there's definitely a way that dollar yen can test 115, break 115 this week. Stronger CPI numbers and Yellen remaining hawkish will definitely allow that, if stocks are going to continue to be relentlessly strong and shrug off any sort of fears, North Korea or China sort of issues. And so yeah, this is the state that we're in. We're a mature trend, but a strong trend and backed by momentum and also fundamentals. So it's not really like we can be looking for this to turn down. If it does turn down, of course at these levels you have to be open to the idea of the market reversing. Alright, but we'd have to see that happening yet. Took a little DAX at the beginning of the European session, got out after it failed. Interesting price action on the DAX. This shouldn't have been such an easy failure. It was surprising to me that it did that. That's Caution. The bulls aren't really as strong as I suspected they would be on the resumption of the uptrend. Let's see if we can get back above it by the close in the US session. If we can't, then tomorrow we'll have a bit more questions for the DAX. But right now, give it the benefit of the doubt that it will eventually get higher. It's just the first couple hours there of trading is a bit weak. Aussie made a move against the Aussie Kiwi today, so you saw Aussie Kiwi break above 105. Kiwi was sold pretty aggressively on the back of that. So the Aussie Kiwi is really big for the flow on the Kiwi dollar. So more than most pairs, the Kiwi US has another, the major, which is Kiwi US, has another side to it, which a substantial amount of the flow comes through the Aussie Kiwi because it's like our little brother. It's much more. It'd be like those European countries, and the euro, if they have a much bigger effect than say just dollar zloty. Euro zloty have a huge effect as well. So Aussie Kiwi has broken back above 105 at that nice little level that everyone looks at, and we're just getting back to these 105.50-ish zone. And if we break that, top side. Now I've been buying a bit of Aussie Kiwi, and I like it. I think the market's got some top side to it. I don't remember doing that trade. That's there's a few dealers who use this trade. Get out of that. Hopefully that wasn't an important someone's teaching someone something. Teaching someone how to lose money. The gold is a clear sell on the rally today. Now why is that? It's just the opposite of dollar yen. So dollar yen's doing well, gold's gonna struggle, and looks like all these rallies are being sold into pretty easily. Now 112 is on the cards to be tested again. But and what happens there is a little bit open. I mean, surely there's some value investors who are looking at gold as a hedge against Trump, and at some point it becomes a bit of a proposition. But the increasing yields around the globe definitely put pressure on it. And without risk aversion, it's hard to say, gold's going up for sure. At some point probably, yeah. But you might get better levels. You might get all the way back down low 1100s. In some worlds, and some people are calling for a test of $1,000 still. In the post QE world where everyone's raising rates, that can happen. If stocks hold up and no major political events happen, then yeah, gold can go back towards 1,000. It's a hedge against central banks, right? Central banks start acting normally, then yeah, gold will suffer. Alright guys, let me read the chats here for a second. Yeah, there's many forms of that little saying. Steady. There's one about the job. Working a job you don't like to buy things you don't need. And spending time. Alright, let's have a look at some of the review out there, guys. I think we touched on most things that are happening here. Data-wise, very, very light. Very light this whole day. So just got to keep going with the flow, and the flow is looking like risk on and dollar yen up, euro yen, pound yen up. Hard to sell into there. Apart from the levels being nice, it's hard to sell. I suspect the data, the bank's analysis will be very similar to that. Yeah, business confidence rose a little bit. That's really tier 3 data here in Australia, though. I don't think that's the cause of it. I think it's just mostly the Aussie was due for a little bit of a rally, and the Kiwi is due for a little bit of a fall. So if you're looking at that Kiwi sell-off, I mean, nothing crazy, but just enough to get the bears licking their lips a little. I'd actually grown very impatient with the Kiwi, and I'd got out of my shorts, and I suggested that if we don't go lower soon, about this point, that we're going higher again, and then it just had to wait another couple of days for the inevitable, not inevitable, the final sell-off. But Can it continue? Yeah, I mean, Kiwi is one of those currencies where it gets punchy when it picks a direction, and the selling usually, it doesn't need a reason, and it can go for 3 or 4 days. And Aussie Kiwi is well positioned here for that rally, so I'm happy I'm long Aussie Kiwi because I think we can get some much larger moves there to the top side. Not for any real fundamental change or reason, just Kiwi weakness on the back of that, because Kiwi just gets kicked around so much. I think this is our friend over there, Greg Gibbs. Fairly sure. Iron ores once again on the front foot as well. And the pounds on the back foot. Is this Greg Gibbs? Yeah, it is. I don't know how the market's ignoring China. I don't know how China's ignoring China. I don't know how China's got away with such a huge rally, huge bubble, and hasn't had any issues yet. I reckon in the next 2 years there'll be a massive issue. Massive issue. Like, it'll be financial crisis levels, bigger than Greece, bigger than European debt issues. It'll be comparable, potentially in effect to the GFC. I just don't see how you can have that much credit growth. Literally trillions and trillions of dollars being created out of thin air, and not have a popping of that bubble at some point. But so far they've survived. Yeah, and it's a miracle, the economic miracle, which is China. But if history teaches us anything, there is no exceptions. There is no exceptions to bubbles, and it's definitely a bubble by nearly every measure. We're talking insane house prices in the last 15 years in Beijing and Shanghai. 500%. Australian data has been pretty stable too. Pretty, nothing there to get the bears ultra moving. House prices did fall a little bit, but that's, it hasn't really become an issue yet. Yeah, this is a bit wordy for what we're looking for today. Let's have a look at this Aussie Kiwi. We want to see if it does have a test right now of the 105.50. Come back to that later. Got definitely too many tabs here, so I'll clean them out after the stream. So yeah, gold testing 1200, Aussie Kiwi breaking 105, definitely on the cards tonight. Those two things happening, and potential moving higher here of the dollar yen to the mid 114s in anticipation of Yellen and stocks being strong, yields remaining strong. We'll find out in the US session if there's legs here. Did briefly go higher than the high there from May. Created a few alerts. Alright, so this is straight differentials that we sometimes look at. Normally they follow fairly close together. Now, they've been diverging for a while. That puts Aussie Kiwi at 110 to 115 as fair value based upon the interest rate spreads. So yeah, it is a really, you know, pretty historically also very low levels. And on the horizon, there isn't really much there that's going to get either the Kiwi to outperform, unless the RBNZ changes its tune, or the RBA. Perhaps we've got something here from Citibank. Tomorrow we get more fireworks from Yellen and also the Bank of Canada. Now, Bank of Canada raising rates definitely can't hurt the Aussie. Could see sympathy in the other commodity currencies. Aussie and Kiwi start to rise as people look forward to 2018 and potential rate hikes here in Australia too. You saw that happen 2 weeks ago when the Kiwi, when the CAD went nuts, and the Aussie and the Kiwi went with it. But Citibank is not making a play on it. Definitely does suggest range trading is going to continue for the foreseeable future for the Aussie though. It really does. Kiwi, well, it might be flushed out. Kiwi actually is a really good buy on a flush out, so we should get into some Kiwi here if it does dip down. I think it's also going to be establishing a higher range as well. I think it can get down to 71 quite easily though, even 70 and some sort of little bit of mini risk off. Major risk off, we can go a lot lower. Tonight at 8 o'clock and at 9 o'clock there's two NPC speakers. Alright, now Haldane is a bit of a hawk, so we'll see what he comes out with. He's speaking first, and you keep that in the back of your mind as well, that there's been a bit of buying on the pound. See if we can get some more acknowledgement of potential rate hike risks. That would lead to the pound definitely having the potential to test 130 in coming days, along with the pound yen pushing to fresh highs. So pound yen, just to recap, is breaking high at the moment with the dollar yen, and it's got some big levels here too. Well, it hasn't been much higher than this. So a move to 150 is definitely on the cards, and you know, the pound recovery, if it breaks 130, can go a lot higher. And May getting losing the PM is not that bad, right? That's short-term bad, but not so bad. I'd buy into sell-off with that. That would be potential for, I believe, a new, more moderate Prime Minister in the UK. But you never know, right? Better the devil you know than the devil you don't sometimes. They're looking for pounds to fall to 120 if May. Jesus Christ. Okay. There's a lot of banks still very bearish on the pound. I wonder if they're all starting to slowly raise their forecasts and over time try and get with the memo. If the euros, you know, can somehow break that 114 to 115's resistance here, then it has the potential to drag the pound along with it as well. Alright, Deutsche Bank early morning read. Very dull 24 hours, extremely dull. So dull, no one got stopped out, no one got take profit. I look at, you know, overview of thousands of traders each day, and yesterday was one of the lowest volatility. There's no story there. Apart from the little bit of a gold bounce, there's not much. Yeah, mild risk on tone. Yeah, so Yellen actually speaks not just once but twice, because she's got to speak to both heads. But she usually doesn't change the wording too much. So Thursdays should be a lot less impact than Wednesdays, guys. Don't think that there will be a major development on the Thursday. It will just have to be some sort of misspell or misspeak. See if we get some technicals. We haven't looked at technicals for a while. Handpicking here, a couple of reports. Alright, so this is Brett Donnelly. He always writes pretty interesting little takes. So we're talking about the Canadian dollar, right? Talking about the Canadian dollar. Now remember, it's had a huge drop in the past couple of months. Whether we can, you know, the Bank of Canada is priced in or not, what the risk reward is to the top side, the oil being under pressure, what's the market likely to do next? A lot is priced in for the Bank of Canada, about 50 basis points this year. Pretty much impossible for the Bank of Canada to hike more than the market has priced in 2017. Okay, so that's true. So they can't come out more hawkish really at the statement either. Wednesday's Bank of Canada meeting looks like a classic buy the rumor, sell the fact. Yeah, that's the big risk everyone's been worried about. Very hard for seeing a hawkish outcome from the meeting. And it's easy to describe multiple dovish outcomes, including the no hike, which is a it is a material chance that they don't hike. And, maybe hike next time. Give the market a little bit of warning. Currency's definitely low from where we've been in the last month. Oil is under pressure. Gold is under pressure. And those who are short the CAD, so long dollar CAD, have been stopped out already. Alright, what's his next little comment? Strange thing is I can't bring myself to get long dollar CAD. Well, I mean, it's hard when they're about to be a rate hike. But the rate move has been so epic that maybe dollar CAD hasn't moved enough. Yeah, over time, I suppose. But we're talking about the short-term move. If you're going to be buying dollar CAD for buy the rumor, sell the fact, then you're probably getting out by 131. Take out some stops above 130, then roll over and sell again. In fact, the trade will be probably, if there is a buy the rumor, sell the fact, to sell into the rally above 130. Either on dollar CAD or on one of the other pairs. And that's probably what we're going to be doing on Thursday, guys. Yeah? We'll be spending most of Thursday's little session talking about how we're going to get it. If that happens, right? So for the rest of the night, short term, keep an eye on what Haldane and the other MPC guy says. Pound's having the most movement at the start of this session. And and then rotate into, you know, watching maybe the Aussie Kiwi if the pound dies down, or the dollar yen at those highs of the day from Asia. Yeah, but pound's having a nice little move here. But because of the lack of really, you know, strong feel here, I'm not going to do a trade. I'm just going to be waiting. I'm going to try and be patient. I mean, I really should be giving you guys a trade today, but sometimes there isn't. Those pairs I really like, which are long euro, long dollar yen, long euro yen, are all a little too high for my liking. Long Aussie Kiwi is about as close as I can get to a trade recommendation, but you've missed, if you didn't buy in Asia, you've already missed 50 points. So that's the issue here. So long Aussie Kiwi is a trade to get into if you really want to get into something that has potential upside here, but you're a little late to the party. So you've got to be careful with your stop where you get out. Alright guys, good luck with your trades. I'll be back tomorrow for an update, give a little preview for the GLN, see what the pound did overnight, and also a little bit more focus on that dollar CAD and how we could fade it afterwards if it somehow manages to squeeze afterwards. Best of luck.